that relative strength pulls back like we were talking about, is I'd really kind of expect us to more or less kind of bounce in between our moving averages here, between our 50 and 100-day moving averages. So I really do expect this to kind of probably stay right around that $27,500 area, and probably about $26,000. I just kind of expect a little bit of sideways, choppy trading action.
If you wanna be crypto savvy, we can help you skip those valleys. Let's rally, yeah. If you wanna be crypto savvy, we can let
Welcome back to Be Crypto Savvy. It is Saturday morning, just about 10 o'clock in the morning here in the great state of Michigan. We're going to be jumping into Bitcoin. However, before we did that, I just did quickly want to say, I know there haven't been quite as many videos coming out over the past week and a couple days. I just had some personal things that I've been kind of getting squared away and kind of focusing on while we were seeing the sideways trading action. I thought that was probably a pretty good time to get that stuff taken care of while there wasn't anything really going on price-wise in the crypto space. So I kind of focused on that, and then just also kind of setting the baseline for the future. At the beginning, we were really trying to pump out videos and get kind of established and that sort of thing. We're still going to be doing that, but just as kind of setting the expectation for the channel, we're going to be focusing on trying to get out 3 good videos every week, and then depending on what's going on in the market, a fourth, possibly fifth video, from there. But for sure, at least 3 videos every week, and we'll go from there. So anyways, jumping into Bitcoin, you can see that we are still, in fact, just bouncing around in between our 50 moving average, which is this green line here, and our 100-day moving average, which is the yellow. Since our last video, we have bounced between about $27,488 and about $26,375. So really close to that range that we were predicting, between about 27,500 and 26,000 from our last Bitcoin video. Right in the price range and bouncing in between our 2 moving averages, just as expected. Now, one thing we did mention in the last video was this small temporary green box here that we had as a short-term temporary support zone. Now, this first was established back here, and then later, after we had that pump and fell back through, that's where we found out that this really was, a pretty good support, and that's where we ended up throwing this in at. Now, if you come back over here, I did say that if we fell back through and got a retest with yet another rejection, that I thought it'd probably be about time that we switched this support zone to a resistance zone. And we did, in fact, see the fall, the retest, and rejection. So I do think that we should switch this now to a temporary resistance zone. So that's what that looks like there. So now we currently have not only the 50-day moving average above our heads, but we've also got this temporary resistance zone also pinning us in between our 100-day moving average. Now, while we've been really focusing on just this small section over here for the past, few weeks, I do want to just take a quick second and zoom out and look at the bigger macro picture here, as we have fallen back within this expanding symmetrical triangle that we started way back here towards the beginning of the year. We are still, in fact, in play with this, as we got rejected from that $32,000 level and have fallen back beneath. So just wanted to also take a quick second and remind everybody of the macro picture before we dive back in to more of a tighter view here. So let's go. All right, on that tighter view, I want to pull up the historical volatility. You can see we are just hovering the top of this 20 line. That 20 line is indicative of high volatility areas. You can see back here around April 8th and 9th. That is when we had that explosive blow off top. If we go back a little bit farther, you can see back here. Let me actually bring this down here. So back here is where we really started the initial pump after that FTX crash. The FTX crash is this big drop down here, and you can see that brought us into the historical volatility sub 20 line right around this area where we got that huge pump here, and then we got that other one here. So if we come back to current time here, you can see we are just slightly hovering right above that. So expect us to probably dip just slightly beneath like we did here before we see movement. Now remember, just because this is expecting high volatility, that doesn't even mean that we're going to see that volatility to the upside. Those two examples that I showed you did in fact happen to be to the upside. However, this high volatility also could be a major rejection to the downside. So please keep that in mind. Currently, I've got the relative strength index pulled up, and we've got this descending trend line coming down here. We've gotten a couple rejections off from. Currently, we're actually trying to break through our average line, which is that yellow line there that we just got rejected off a couple days ago here on the 17th. So currently I'm watching to see if we're going to break through that average, which would be a slightly bullish sign. From there, I'd watch to see if we're also going to break through our descending line here or get another rejection. Personally, I'd kind of like to see that get rejected off this descending line here and pull back a little bit farther to this 30 line here before hopefully seeing that move to the upside. That would just give us all that more strength to make that move possible. Now, over the next several days, I'm really not seeing a whole lot of, intense price action. The biggest move that I would really anticipate is a possible wick down to the $25,000 support zone, which also is where our 200-day moving average is. So this area here is super strong with support. So it'll be interesting to see if we even get to that point. However, if we do, I do expect that it would be a candle similar to this, where you would see a long wick, but then the price would just get eaten right back up. So I think we do have a shot at 25,000. However, for the most part, I think it's just going to be the same type of thing. I think we're just going to be seeing some kind of bouncing back around, mainly between our 50 and 100-day moving average. I think this week that we could possibly see that dip down past the 50 like we did back here. I'm sorry, past the 100-day moving average like we did back here. However, I just think that there's too much buy pressure for that to remain at that level. However, towards the end of the week, I do anticipate that we could start seeing this, having those indicators reset more or less to where we could start seeing that. So anyways, we're going to leave the video there. If you got anything of value from this, make sure you smash that like button, and we will catch you folks on the next video. Enjoy your weekend. See ya.
Like, comment, and subscribe, yeah.